Hey guys, welcome back to Option Club. So this is a video dedicated to gaps because you're finding gaps here and there in the market. So we'll take a look at gaps and some important things to know, especially while you are trading. Okay, so let's get to it. So what you need to know is gaps most often get filled within the first week of creation. So gaps most often get filled within the first week of creation. So what I mean by that is, if you just take a look, so you can see here, okay, again we got a gap, 1, 2, 3, within 3 days we got a fill. So here also we had a gap, within 2 days we got a fill. Here also we had a gap, within 2 days we got a fill. So most of the time it gets filled within the first week of creation. Okay, so I think we looked at the example. So you often see that gaps get filled within the first week of creation. Now the most important thing is the gap from where the close happened is important and act as a turning point. So what I mean by that is, we'll just take a look at a recent example. Fine, on Nifty. So on Nifty we had a gap border. So if you go to 5 minutes, on Nifty we had a gap border right here. So that was on your 20th June. 21st June we had a gap border that was formed. So if I mark the gap border, this was the gap border in the market. So I've already marked it. So we had a gap border in the market. So you can see that market tried to fill the second day. Fine. Third day. So the first rule has come. So gaps most often get filled within the first week of creation. So that is done. Now the second one is, the gap from where the closes happened is important and act as a turning point. So here. So from here is where the market closed. Now, so this was the gap border from where the close happened. So next day open happened here and the gap was formed. So this is not important. I would reckon that this is not important, because you can see that market was playing around here, and though it reversed, it came the next day and touched the gap border from where the close happened. So that is what I'm telling you guys. Especially if the gap happened, okay, and the second day market comes, do not take it at face value. Please do not look at this gap border. This gap border is not important. Look at what happens at this gap border from where the closes happen. Okay, so yeah, we got a gap fill. We got a gap fill till here. So market had not filled. We had a small, on Nifty, if you look at the points, we had a 2 to 3 point gap that was still pending. So we had a 2 to 3 point gap that was still pending. So you can see that market came and filled that gap. So once market filled that gap, what you had to see is from where the close happened. Okay, from where the close happened, you can see that market broke it and reversed. Though you can say that there is not a strong reversal that has happened here, it reversed. It reversed. If it had gone long, it was a good up move till here. Now I have a strategy. I'll tell you guys about the strategy a little bit later. So you can see that the market from there, it was a good up move. So you got a risk reward of around 1:7. So that is what I'm telling you guys. It is very important to know what happens from the close of the gap border. So you can see that short covering happened and market has shot up. Now again we are finding that market is trying to push up. So again we had a gap here, fine, in the market. So we had a gap here, and this gap was filled in the second day. So again our first rule has worked. So gaps most often get filled within the first week of creation. Okay, the gap from where the close happened is important and act as a turning point. Now you can see here that, okay, there was a gap in the market and the market consolidated below this gap border and it tried to push above. Fine. So let me remove this. So this was previous day low. There was no gap border here. From here, though gap, but market did not close with a gap border. So you can see that market consolidated exactly below this level and market turned towards the upside. So that is what I'm saying, from where the close happened. This is the close. So this is the gap border from where the close has happened. And this is the gap border from where the open has happened. Na? So market has closed here. So this gap border is more important than what happened the next day. So that is what I'm telling. You need to know why. Because why did the gap form? Whatever happened here is not relevant. What you need to know is, you need to know what was the price action that happened here that caused the gap to form. So that is why the gap border from where the close has happened is more important in the market. So I showed you guys two examples and the power of gap border, how market is reversing. Okay, you can see that you can make a good money. You can make good money on the upside. Fine. So that is about your gap border close. Now you can see Nifty's gap can disrupt Bank Nifty's trading activity and vice versa. So let's take an example of recent example only. So if I go to 5 minutes again on Bank Nifty. So Bank Nifty we look at same. We look at your 23rd June on both indices. So 23rd June we had a gap border on Nifty, but we had no gap border on Bank Nifty. So you can see that Nifty exactly 110 candle was the lowest point of the day. So you can see on Bank Nifty also the 110 candle was the lowest point of the day. After that market shot up on Bank Nifty. Why did market shoot up on Bank Nifty? Is because Nifty broke the gap border and you found that there was instant demand on Nifty. Once the gap border from where the close happened, once market reversed, you can see that you got a good up move towards the upside. So that is what I'm saying. Nifty's gap can disrupt Bank Nifty's trading activity and vice versa. So ideally, if you find short covering after gap border break, market is extremely bullish. It would be buy on dip till a range breakout happens. So you can see that, okay, short covering has happened. How I know short covering has happened is because we have found that market has found demand above the ATMA. So once gap border breaks, you're finding short covering happening. That means that market is extremely bullish. You can see next day you got a gap up, but market filled the gap. So you again got a gap up and market is trying to push above. So market is extremely bullish after this short covering move that happened after a gap border. And on a daily time frame also, market looks extremely bullish on Nifty. So that is why ideally if you find short covering after gap border break, market is extremely bullish. It would be buy on dip till a range breakout happens. So one more thing you need to know is there's no way to know the actual direction of the market after gap fill. Okay, what I mean by this is if we go on to a daily time frame, you have these gaps that are not being filled. So you have this gap that is not being filled. So you can see this gap, 158 point gap. So the market fill the gap, but you don't know the direction. So if you thought that the market would go up because it's consolidated and market is coming up, you can see the market reversed and fell down. So that is what I mean by you don't know the direction of the market after the gap fill. You have to wait for a breakdown to know the actual direction of the market. Or in case of market breaking above, here only I think you got a hint because you got an open and a close inside the range. So most of the time when you find this kind of candle, the market continues in that direction till a low has been broken. In case of that, this low was not broken. So once this low was broken, this was your time to book profit. But again you found that market fell down. So let's take a look at another example. We had a gap border that was around here. So market came and filled the gap. So let's take this thing out. So market came and filled the gap exactly here. So you can see that after 2 to 3 months, market came and filled the gap. Now that's what I mean. You don't know the direction of the market. So market consolidated and it broke above. So that is the direction of the market. Don't try to short it just because the gap is filled. Don't try to do that. Sometimes market can consolidate and continue on the downside also. So range breakout is what you are seeing. So market will most of the time travel in that range. So here also you can see that we had a gap that was here. Though it was a very small gap, there was still a gap because the gap was not filled. You can see here that the gap was not filled. So you can see that market came, broke the gap border, fine, and it started consolidating. And once you found a range breakdown, the market continued in that direction. So that is what I mean. Once gap border is filled, let it go into range. Once it breaks down or breaks above range, you chase in that direction. That's it. So don't try to chase just because it's breaking down. Don't try to short the market instantly because the gap border is filled. On Nifty, Bank Nifty, don't try to do that. You can see a market reversed up, but in this case market crashed. So that is what I mean by there is no way to know the actual direction of the market after the gap fill. So I hope you guys understand this. Since we are getting gaps very often in the market, I felt that this video will be a little bit important. because you're finding gaps. You can see that the gaps are happening very often nowadays in the market. So that is why you need to know how to trade gaps and what do you need to understand from the gaps. Gaps are basically because there has been no trading activity. Okay, market sentiment has changed. So sentiment has changed. So sentiment has changed. Now why sentiment has changed? That depends on the stock. So stocks financials could have changed. There could be an event, etc. So why sentiment has changed? Stocks, financials could have changed, or there could have been an event, or etc. Like what happened in Russia, Ukraine. You can see this. They found a huge gap, and market tried to push down. Everyone thought that market is going to crash, and it rallied up, and again it crashed. So that is what. And I'll also be talking about in my next video why I don't think that the market is extremely bullish. So why the market is not extremely bullish, that I'll be talking about in my next video. So I'll see you guys in the next video. Have a nice day. Bye bye.